Hello, my name is Mark Berry, and I'm the owner of Dependable Mortgage Solutions Corp, or DMS for short, and I'm your host of Learn to Lend. This is a podcast for inquisitive minds looking to learn more about residential private lending in Alberta, or just wanting to find out more about who DMS is, what we do, and how we do it. So with that, let's get into it. Hello, welcome to today's podcast. Again, I'm your host, Mark Berry, and today I want to talk about private lending, kind of the definition of private lending, what it is, and what it means to you, the investor, and to borrowers and to other stakeholders. So, private lending has been around for thousands and thousands of years. It's really just one individual lending money to another individual or corporation to corporation. And the private part is the distance from regulation. And don't get me wrong, private lending is still regulated in Canada. It's just, it doesn't fall under the banking regulations. It falls more under the Interest Act and other various acts. So in the past, it was always private lending was always referred to as shadow lending or dark lending. And it was meant for really tough characters to get financing with really terrible credit in foreclosure or other various problems. Private lending in 2025 and since about 2015 has really changed. Private lending has really moved more to, say, an alternative lending is really what we want to call it, or alternative financing options. So as the bank since 2014, especially back since the financial crisis of 2008, changed their way of thinking on lending. And during that time, A banks and A traditional A lending, the rates dropped massive. And then included in that was a tightening of restrictions. So A lending became a very small box. And they said, you know what, here are our guidelines. And they're not guidelines anymore, they're rules. And you must fit into these rules or we will not provide financing for you. If you do fit into those rules, however, you get very good rates. At some point it was 1.5% interest rates. Now it's sitting right around 4% right now and fluctuates a little bit. And then we had what was called secondary lending or alternative alt A or B lending. Well, B lending as of 2014 into 2015 started falling under the same regulations. They had a little bit more wiggle room, but for the most part, they still fall under OSFI, which is the Office of the Superintendent of Financial Institutions. And what that has done is that's created a really large kind of gap to where if you don't fit into the government regulations, whether it be your current employment status, how long you've been self-employed, if you are self-employed, if you owe money to CRA, or the Canada Revenue Agency, for those who aren't aware, or if there's been a situation where, you haven't just been able to maintain your credit to a level. And sometimes that's not really about bad credit. It can just be high credit utilization for whatever. Maybe you're expanding your business. Maybe you ran into some temporary bumps with COVID, or you increased staffing, something along that lines. And now you don't fit into that box. So once you don't fit into that box, and even the slightly bigger box than alternative A is, the only other option is private lending. So private lending is not bruised credit and not as shadow lending as it used to be. So most of our borrowers are very close to bank borrowers. Many of them have bank loans. Many of them have very good credit. It's just from a servicing standpoint, from the stress test, sometimes it's about timing. They need quick and efficient financing to maybe close on a property that needs to close very quickly. Some of it's transitional. They've moved from another province to Alberta. And in order to do that, they need financing. So a lot of the lending we're doing today is lending that I would have done as a banker at CIBC in 2010. In fact, a lot of the lending in a lot of our opportunities that you'll see at DMS are loans that could have been approved in 2010 at CIBC when I was there. So I feel very confident in the deals that we're presenting. And I want to go into one last aspect of this before I wrap up on today's podcast, and that is the differentiating between private lending. There's a lot of confusion as to, what is private lending and the types of private lending. So there are really three types of private lending. One is what's called a mortgage investment corporation, or a MIC. And MICs are just pooled funds. Some people put in $1 million, some put in $1,000, and several different investors, they put money into a pool, and then that pool was administered by the Mortgage Investment Corporation and lent out according to the memorandum. So those returns are often dictated by that performance and integrity and execution of that mortgage investment corporation. And so mortgage investment corporations have a big plus in the fact that they have a high utilization. If you put $1 million into there, $1 million is working. And that's very comforting for people. However, your control, you don't have any say on the loans that they put their money into, because that memorandum can be a little bit subjective and there can be some kind of gray areas around the surface. And that mortgage investment corporation could put some of your money into loans and properties and locations that you're not 100% comfortable with even without your knowledge. The second one is what's called syndicated mortgages. And that is where two lenders, or 3 or 4 or 10 or 20 lenders, are put into the same mortgage. You have a little bit more control because you will have a say in where your money goes, but you only have a say at the start. Okay. You don't get a say very much in the end of that loan. So syndicated mortgages carry a little bit higher risk than a non-syndicated mortgage, because again, you have a say as to when you get in, but you don't really have a say as to when you get out. So you're still relying on the administration and the execution of the administration company that's handling the syndication and handling the payments. But syndication, again, allows you to participate in more loans, and it allows you to kind of diversify your portfolio, because if you have $100,000, you can have $10,000 into 10 different mortgages. The third and last one that we do, and that's the one we do at Dependable Mortgage Solutions, is what's called IPLs, or individual private lenders, which is 1-to-1. So there is one lender. That one lender can use a variety of sources, whether it be personal cash, RRSPs, TFSAs, LIRAs, or corporate cash, to fund one mortgage. And that one mortgage is then registered on title in that person, that corporation, those registered funds' name. So you get 100% of the choice of when you get in. You get 100% of the choice of kind of when you get out, as far as dictating the rules as to getting out. And I'll touch on that in a different podcast. But for now, I just wanted to kind of touch base on those three options. And the one that I pick is the IPLs, the 1-to-1 lending. It's a little bit trickier because your money is only available to match the individual mortgage. So if you have $100,000 and there's a $120,000 mortgage, well, it's not possible to fund. Or if you have $100,000 and the mortgage is for 65, you're like, well, what do I do with the other $35,000? And that's, the downside of IPLs. But the upside and the risk, and the one thing that I personally have really taken to heart, is this understanding that the lender's money and the risk and your retirement is very important. It is more important to have a secure, reliable, and dependable, I'll say it, return on your money and that private loan than it is for what I consider to be 100% capital utilization. So I strive very consistently to ensure that we get as high capitalization as we can. If you've got funds out there and you want to get them working, I also want to get them working for you too. And the team here at DMS will also try and get those funds working for you. That's it for today. And that's it for private lending today, and that kind of introduction and understanding what private lending looks like. On the next episode, we'll get into a new topic and a new discussion on private lending. Wish you all the best. Thank you, and have a great day.